Sup. Come on, man. Let's go. What you're looking at here what is this? Day 1, 2, 3, 4 into a stage 4 decline. E-Tran. It's a midstream corporation. They got some legal issues. This is stock I hold. It is now in a stage 4 decline. Once this happens, not there, this, if we're looking at the stages, and anybody can do this, by the way, you got everything you need inside of you to be a great investor. I didn't say you'd be a great trader, but being a good investor is a lot easier than being a short-term trader. It's different. It's a different game. And they're different hats and they're different things. You know, flipping a house is different than buying a house and renting a house. It's two different things. Usually you're looking for a different kind of property. Now, they might overlap at times, meaning you might come across one, or maybe a guy that's flipping houses comes across one that would be a good rental, and they cross paths and they deviate. But usually someone's focused on one, you know. So as we watch a stock go through its life cycle, and that's what the money flow talks about, is this idea that stocks drift, right? And they might drift up, they might drift down a little bit, but they drift. All right, we're going to turn off this for a second. We're going to turn off questions for a second. Hold on, man. Turn off comment. You guys are going to interrupt the class to ask me something silly. Like, Gerald, should I be an investor? Like, we're not asking that, are we? We're past that, man. Come on. So we throw this on here, and there's this idea with the money flow that, God, come on, man. What is happening? I'm having a little computer malfunction. So every day this drops, and we're going to talk about some going up, but you need to look at some going down. This is a midstream. This company pays about a 6% dividend yield, 5% dividend yield. They've got some court issues going. These are the guys that get gas to your house. And I believe the money flow moves in 4 stages. And that, when I'm saying money flow, I mean the money flowing in and the money flowing out of a stock moves in stages. And we can begin to identify it and say, okay, what stage is this? And as I watch this as an investor, so I've already made a commitment to this company. I'm not looking to get out. I'm looking to increase my share size, man. Get it? So as it comes down, I'm not looking for a reason to be out. I'm looking for a reason to be greedy and buy more. And I want some down here. Maybe it's just $50. You know what happens? You do $50 every stage 1 of fucking Tesla's life. You have a lot of money, man. We could do that with 100 stocks, man. You can do that. You know all kinds of stocks, man. You know better stocks than I do. Shit, you're around them. You use them. You drive them. You eat them. You drink them. You're at work with them. You're looking at them. You're on the internet. You're on forums. You're connected to people. You know people like me. Every day I get up is to play this, and you know me. And there's probably 30 other people like me, you know, who are trying to get fucking rich every day. I'm trying to make money with money. So I want to take $100,000 and turn it into $500,000. And you say, well, what if that takes 6 years? Okay, but I'm still doing it. And then I want to get another 100 and do it with that one. And then another one. And I got all this money going in these cycles. I drew this on the board the other day, and I guarantee you no one's ever drawn that or showed that to you. Money goes into cycles, man. And these are the stages that money moves in. And it goes up and down for all kinds of different reasons. It doesn't matter. We don't give a shit why it goes down. It just goes down. And when it does, it stops and goes sideways because there's an intrinsic value to business, to cash flow, to balance sheets, to assets, to production, the ability to make money with money. So AT&T, as long as they can pay that dividend, even if they're cutting it, there's a price where it's a valuable asset. And I might want $50,000. Boom. I put it in there. I'm not selling it. I'm holding it 7, 10 years. They're going to pay me money and more money and money. And what if I take that money? Watch. Oh, it's a chess game, baby. Look. Most people in America had no fucking clue this stock had stopped going down and started to go up and cross this green line. Well, what happened over here? It crossed the green line the other way. What do you have? Looks a lot like this. This is a totally different stock, BX. If you look at this, watch, see if you see a pattern, a price movement. And the pattern isn't, I'm not making a judgment on up or down. That's based on value. That's based on profits. That's based on perception or social agreement, man. We have to socially agree, right? Bitcoin's a social agreement. You say, well, I don't get it. Then don't do it. It's a social agreement. And as you begin to see this and you look, you'll say, wow, that looks a lot like that. Yeah. Yeah. And as I watch this movement of price, I know my opportunities are here. But it's not without risk. It could keep going. I know that. I know that. But I can still use this to my advantage. Right? What do you want to do? Buy it after it's gone up? And so just based on that, the flow of price, or what I call the money flow, if you look at this chart, you can look at it and you can see it. It'll move through these patterns of price. It'll move up, and it'll stop. It'll start to go over, and then it'll move down. If I have a fundamental belief that over time this asset's going to go up, or owning this asset does something for me, meaning owning a house, whether the price goes up or down, it still can collect rent. Maybe the rent's lowered, okay. And maybe it's raised, okay. But I can keep it either way. And let's say it's lowered, therefore a lot more people don't want them. What? If I have money, what? I can buy more. Why? To sell them later to people, what? Who are willing to overpay for them. Was this a good place to buy AT&T? No. Now, over time, that may be fine. Absolutely. Over time. Why? Assets drift higher. You don't have to be a genius to know that. Right? So over time, if you own Pepsi, over time, the inflationary prices of the cost of Pepsi and production, assuming they stay in business, it drifts higher. But the way that it drifts higher is inside this cyclical pattern of price moving sideways, running up, moving sideways, running down, moving sideways, running up. And guess what? I don't know where it's going, but I know it's doing this. I got people calling me, man. Why are you calling me, bro? Give a guy your cell phone number. Now, you know I'm prone to be on live any morning. So now AT&T, if you own this and your portfolio is on your radar to buy, is it time to buy? According to the book. I need to take that down. I keep switching to the wrong page. Now, it's going this way, right? It's going this way. So as you get out your little pencil and you get your notebook and you go, I own AT&T, I own SDY, I own BX, I own McDonald's, I own Verizon, I own AT&T. And as you go through the charts looking at these, what could I buy a share of today? Do I want to buy, so if you look, what's happening in BX right now? It's above the 20, right? Where's the bottom? Well, so far, right there. Now what? We can draw a line, right? So there's our support. Where are potential zones that it could go to? Well, it's been there and stopped, right? Built a little mini box, right? And then where's one? Up here, right? And we can see these. Third grader with a crayon could find this for me. So if price starts to move over here, on the chart, which is what we're seeing. This is the stage 2 breakout. You're right there on Instagram, YouTube. You're right here. It's breaking out. Prices moved above the 20-day average. Simple average. There are 20 trading days in a month, 5 days a week, 4 weeks a month, right? It's fractal system. So we have a 5, a 10, and a 20. 5 days represents 1 week of price average. Is the price of BX above? All right, I'm going to say it's slow because I know the people on Instagram move slower. So look, you see that little dotted red line right there? That is the average composite price of the last week. 1 day, 2 day, 3 day, 4 day, 5 day, right there. If we add these up with third grade math, is price higher than the average or lower? What does that tell us? It gives us our breakout zone. Is price breaking out, meaning above it, or is it breaking down, meaning below it? So when I see it, if I'm using the money flow, now you might be using something else. If you're using something else, I don't know what the fuck to tell you. I don't know what to say. So this is what I use. Okay. Now there's all kinds of other indicators. The other day I was showing Bollinger Bands and how very similar Bollinger Bands are to the RSI. But I don't use them. I use RSI. So I stay with it, right? And I'm going to use the RSI to help me interpret this. Stage 1, I assume the RSI is below 30, or at least it was for a minute to get the corner point, the anchor. What is the anchor? The anchor is the lowest low. The lowest low, and the anchor is the lowest high. Man, I wish we were friends so we could talk about this for real. This is your anchor point. So now that AT&T is one of our friends, it gives me money. This company gives me about $3,000 a year. Pay up. You owe me. If I want to build that, right? I want to buy the prices lower. Or do you want to buy them higher? Lower or higher based on what? What is the value of the company? Right? We got to ask ourselves this. What is the value of AT&T? Is it the stock price? No, man. Stay with me, man. Don't let me lose you right here, okay? This is where I start losing the people on Instagram. Stay with me. Stay with me. You can come back and watch this later. AT&T's cheaper than BX, right? What's up, Rodney? They say it's worth $29. What's it trading at? 24. We can come to a social agreement that it's undervalued. That does not mean it's going to go up. But we at least know when we approach or looking at this, if we're looking at our holdings, we could say this part of our holdings of our portfolio, this part of my portfolio is cheap. It's not, it could go cheaper, but it's on sale, right? Now what? If I want to add to that, if I like it, I like the sector, I like the industry. So instead of trying to get out of shit, I'm trying to accumulate shit. So these guys selling Bitcoin, I'm trying to get 10 Bitcoins, man. I don't know what you're doing. Fuck out of here. It's going to go up, down, up, down, up, down the rest of your life. You get to choose whether to be in it, accumulate, and make massive profits, or I don't know. Do what you're doing then. I'm just telling you what I see. And the people that I see that make a lot of money have a lot of shares. They have a lot of tokens. They have a lot of this, a lot of that. Not less of it, more of it. They wonder, how did Warren Buffett get so rich? Really? He bought very valuable things when they were inexpensive and held them his whole fucking life? It's not that complicated. Now, he did other things. Like what? Took over insurance companies, which is what? He invested in business, right? Watch this. Let's get off this book for a second. Come over here to the, hold on. This is super important, man. People get lost. They get in the stock market, start going down rabbit holes. Where's it at? Hold on. Lose sight of the big picture. Maybe you go back and you reread this one day. Here, hold on. Hold on, YouTube. You basically can invest in 4 things. That's what I say on here. Yourself. Never been more important than now. Skill sets, learn new shit, staying healthy, all these things that you can do for yourself. Let me let you know what else is for yourself. A house. So these people will tell you a house is not an investment. What do you? Of course it is. It's in yourself. You need a fucking place to sleep. You need it safe. Yeah, that's in yourself. Okay? Of course you would do that. See, they start with the foundation wrong. Mindset's wrong right in the beginning. Fuck, everything I touch is an investment. Where I sleep is an investment. It's going to appreciate. I'm going to take care of it. The loan's going to get paid down. It's leveraged. I'm going to get tax deductions. Is it the world's greatest investment? No. But I'm here, so why not do it? And so as I go through, that's in myself, investment in myself. Owning a business. It's the fastest way to get rich. You go start one. You say, well, I can't start one. Then invest in one. BX is a business. These guys are in the business of asset collection and then selling it to people when the shit's really expensive. So in 2009, they bought 16,000 houses, fixed them, and then sold them in 2015. All 16,000. Do the math. This is why the stock is $119. They started this shit at $26. And they just buy assets, they take profits, they accumulate, they buy businesses, they invest in stocks and bonds and REITs and real estate, and they just push and push and push and borrow and push and invest and borrow and push, and it goes higher and higher and higher. Same with Berkshire Hathaway. Go look, there's 100 businesses in there. Why? He's been doing it 60 years. And he grows richer and richer and richer. It's not a secret model. You didn't know they do that? You didn't know where you eat, somebody's paying rent. You didn't know where you store shit, someone's paying rent. You guys want to own a boat? Good. You get to pay some landlord. Right? You want to go on vacation? Good. You get to pay some landlord. All of these are transactions, man. And this is the money flow. Some of it's digital. Some of it's in crypto land, right? And some people have a hard time understanding that. That's all right. You don't understand parking lots either. It's all right. You don't own any storage sheds either. But the guy that owns the storage shed, he doesn't work there. The guy that owns the hotel, he's not cleaning sheets, guys. The person that owns the Airbnb you're renting, they're not there. What are they doing? Something else to make money. All of a sudden, as accumulator, see, this is never put in people's brains. If you own lots of shit that pays money, you get rich. It's not complicated. If you sell it, get out of it, no longer own it, you don't get to participate in that. So you see how a guy that doesn't participate in the downside but collects all the cheap prices and only sells into the upside could have a mental advantage over other people? Or a long-term strategic advantage and begin to build wealth on a massive scale and have started with very little? Yeah, man, that's how you get rich, dude. That's how people get rich. You guys making $300,000 and $400,000 a year, you and the wife, you should be fucking quadruple millionaires in very short order of time. If not, you chose not to. You just chose to put your mind on dumb shit and not participate. You get to decide today, do I buy this stock or not? Every day you make the decision. You get to decide. Now, I think I'll buy these shoes instead of buying AT&T stock. And then another day goes by. I think I'll buy these cigarettes, beer, fucking weed, anything else on planet Earth but this. And I'll keep doing that week after week, month after month. And then that guy goes, man, I don't know why I'm broke. Because everything you bought depreciated and went to zero? So you have to buy things. Yes, they go up and down. The volatility of this stock is what allows us to get rich. The volatility of Bitcoin, the reason that it can drop so fast, that is why you can get rich. If it didn't do that, it doesn't do it to the upside. So if this stock never comes down, we can't make money when it goes up. And that just went right over most people listening's head. You're like, huh? What do you mean? Let's see. Where's Bitcoin? Putting in a box. You should be nibbling. You don't have to get a lot, but if you've let a week go by, you're not buying Bitcoin. What? Fuck, dude. Turn the computer off, man.